We're in the third week of February, towards the end of the month, and there's a lot of noise about what's happening in the real estate markets, what is happening in the economy. What should people do with regards to the tariff threats? What's going to happen to interest rates? In this episode of Building Wealth Brick by Brick, with me, Nico James Bach, a broker at Royal LePage Signature Realty in downtown Toronto. I'm going to cut through the noise and present you with what is really happening. There are, in the current climate, really two markets. What are those markets? Well, we'll take a look now. As I mentioned, there are really just two markets where it's a division between condo and versus castle or freehold. I like to divide those markets because really it depends on which market you are in that will dictate your next move and what's happening to prices in those respective markets. I always say that real estate is a long-term investment. So it's helpful to look at where prices are going in a month over month or year over year basis. But it's even more important, especially in these times, to look beyond that. So to 5 years, 3 years, or 10 years. I have on the screen right now the MLS Home Price Index benchmark price, which gives you a pretty good idea of where prices are headed, where prices have started at the beginning of the year, and what has changed. And it's really helpful to look at where prices were 3 years ago or 5 years ago. So if we look at just the Ontario market, I have some representative cities here, just for a quick reference. We look in the Guelph area, and we see that in January, prices in Guelph for all home types, the HPI index, composite HPI, is at 825,800. 1 month ago, there was a 1.2% gain. 3 months ago, 1.8% gain. 3 years ago, if you recall, we were in 2021, 2020, beginning of 2022, there was a negative 13.7% change in the prices in Guelph. 5 years ago, however, there was a 42.4% increase. So that gives you a pretty good idea of price change in Guelph. If you go to Hamilton, Burlington, the average price is 830,900. Just 1 month ago, there was just a 0.2% gain. 3 months ago, there was a minus 1% loss in price. 3 years ago, again, 2021, beginning of 2022, minus 17.8%. Well, what happened 3 years ago? We know that there was the massive increase in interest rates. So, as we know, as one of the 7 factors that affect real estate prices, is the cost of ownership. When there is such a major disruption in the cost of real estate, it's felt immediately in the sale price. 5 years ago, however, in Hamilton, Burlington, we see a 38.5% positive change in prices. 5 years ago, we were dealing with historically low interest rates, basically getting money for free. Kingston and area, 576,800 is the average price as according to the January 2025 statistics. 1 month ago, the Kingston area saw a loss of 0.7%. 3 months ago, 3.3% gain as we are heading into the end of 2024. 3 years ago, around the same time that we were experiencing historically low interest rates, and then we had that incredible change in a jump in the cost of the overnight lending rate. We saw in the Kingston area a minus 3.6% change. But 5 years ago in Kingston, they saw a 56.1% gain in the average price. Moving to some of the more populous areas, we have Toronto. Toronto, the Greater Toronto Area, the average price in January 2025 is 1,089,300. 1 month ago, Toronto saw a normal price decrease of 0.1%, so nominal. 3 years ago, during the peak or the start of the peak, we are at a minus 12.6% change in the price. However, 5 years ago, in the Greater Toronto Area, the average price saw a 36.9% increase. People, there is no other commodity other than real estate that will give you that kind of a return. However, it's important to understand that you realize those returns the longer you are in real estate, okay? The longer you stay in real estate, the bigger the gains. It's a long-term investment and well worth it. So the overall picture regarding housing, optimism amid challenges. That is my mantra. Despite economic concerns, including potential tariffs, lower interest rates, and we are in a lower interest rate environment, are encouraging real estate activity, marking a shift from the artificially low rates of 2021 and 2022. Tariff uncertainty and interest rates. While the U.S. trade policies under President Trump create uncertainty, potential further rate cuts by the Bank of Canada could support the real estate market by offsetting economic slowdowns. So the housing market stability is a direct result of that. The Bank of Canada's rate cuts have provided relief to homeowners, and the mortgage stress test ensures stability. Remember, we are still in that stress test requirement. So people are, for the most part, when they get a new mortgage, are stress tested. So they are able to handle fluctuations in terms of a higher interest rate. So that's really what has protected the environment that we are in. And we're seeing not as many defaults as we would have thought. Reducing downward pressure on home prices, impact of immigration and the condo market. So the reduced temporary visas for international students, combined with high condo completions, may soften condo prices, creating a buying opportunity before a future supply shortage between 2028 and 2031. Market opportunities and CMHC changes. Increased CMHC high ratio mortgage limits, which kicked in on December the 15th of 2024, raising the ceiling from 1 million to 1.5 million. So basically, the actual ceiling before December 15th, they actually kick in on the 1st of January, but they were announced to kick in on December 15th. The ceiling was 999,900, over which you are required to put down 20%. Now that the ceiling is from 1 million to 1.5 million, with a lower down payment requirement, it opens the door to many more opportunities for buyer. The sweet spot actually is not at 1.5 million. That's just the ceiling. The sweet spot for most buyers is 1,050,000, 1,001,000, 1,002,000, 1,250,000. That area is really where most first-time buyers or second-time buyers are targeting. And now with this raise in that ceiling, it opens up a lot of more possibilities. So what are the key takeaways? In terms of real estate, this is a tale of two distinct markets: freehold versus condo. Most freehold markets are doing brisk business with multiple offers in some pockets and fewer days on the market overall. Prices are creeping upwards with each passing month. If you want to get into a freehold property by upsizing, it's a good time to do so now because prices will continue to increase as we head into the spring and summer markets, as well as the fall market of 2025. We are now in a declining interest rate, overnight lending rate environment. Even the 10-year benchmark rate, which dictates fixed mortgage rates, is hovering around the 4% mark. There are even actual cases where you can get a fixed mortgage for like 3.9, for example. It would obviously depend on the home in question, as well as the credit worthiness of the applicant. Prices in the condo market over the next year will remain soft. Okay, and we will see slight downward price adjustments to clear out the existing inventory. Until 1.5 to 3 years from now, when there are no new condos coming to market, so in 2026, end of 2026, 2027, 2028, and prices will go sky high. Now, this is backed up by a direct quote from Benjamin Tal, who is with the CIBC during a recent keynote address. So mark my words, this situation that we're in now with regards to the condo market is temporary. The next year to year and a half is a time to get into the condo market as a buyer. If you're a condo owner, hang on to it, and if possible, rent it out if it's not your primary residence. Then consider selling in 2026, 2027, and especially in 2028. Always keep in mind the 7 factors that determine real estate prices. We here in Canada have quite a few issues to deal with elections next week. The Bank of Canada announcement on March the 12th, a cold end to winter. Overall, though, we are economically quite sound and heading in the right direction. There will always be elements of uncertainty, whether from the US or elsewhere, or even domestically. Stick to the fundamentals, and you'll see that things will work out as they always have, and we will get through this. If you look at the TREB average price for the 5-year period, we'll see the usual dips in the average price in January. We will have the February market stats available in about 3 weeks' time. So we'll see, we will start to see the trend line point upwards. Now is the time, if you are looking to buy, either right sizing, downsizing, upsizing. Now is the time to buy, especially if you're considering a condominium. Now is the time. If you don't have to sell, then hang on. Remember, do not make a permanent decision in a temporary situation. Don't panic and consider making a permanent decision that you cannot back away from. Stay positive, speak to competent and reliable professionals, and make decisions based on facts. I present the facts and charts on all my social channels and also through this podcast. So go through them. There's also a video version on YouTube of these podcast episodes, so you can follow along with the charts. Please remember to consider all options, consider all information, speak to the requisite advisors, your real estate professional, your mortgage broker, your financial advisor, and your bank manager. Only then will you be able to make the right decision that is right for you. That concludes this episode. We will update you on the events as they unfold. Ciao, ciao.